Hello and welcome to Moneycontrol Newsmakers. I'm Ashwin Mohan, and today we have with us two very special guests. And in fact, it would be an understatement to say that both of them share a lot in common, be it work life at KKR, be it common investments in a whole set of companies, whether it's Max Healthcare, whether it's Geo Platforms, whether it's Reliance Retail, be it the stellar market debut of Nykaa, or the emergence of the new kid on the block in the VC space, that's Sorin Investments. Without further ado, let me introduce the two gentlemen who are joining us on the show today. Sanjay Nair. Sanjay is, of course, the founder of Sorin Investments, and joining him is Angad Banga, the Chief Operating Officer of the Caravel Group, which is in fact the first investor of Nykaa and the largest investor as well in terms of percentage shareholding. Sanjay is joining us from Paris, and Angad is joining us from Hong Kong. I'm joining you from India, so this is the ultimate multi-jurisdictional interview. Gentlemen, thank you so much for taking our time and speaking to Moneycontrol. So let's kickstart. For starters, I'm very curious about the visibly strong relationship between the Nair family and the Banga family. So help us understand, where did this begin? Was it Angad's dad, Harry Banga, the founder of the Caravel Group? Was that the trigger? Was it the first investment in Nykaa, or did you guys, or did the families get to know each other better during your respective terms at KKR? Sanjay, why don't you start the show?
Sure. Thanks, Ashwin, for having Angad used to run capital markets at KKR in Hong Kong, and of course, I was setting up India. But that's how we got to know each other, and I think that relationship continued. In a lot of things in life, relationships, chemistry, congruence of events make you, kind of close to each other. And I think we maintained the relationship even far beyond when he left KKR and moved on to the family office of his dad. So yeah, that's how we met, and we've maintained the relationship ever since.
Angad, this is your first detailed on-camera interview with an Indian media house. Would you like to chip in there on the relationship between the Banga family and the Nair family? At the beginning of this show, I did refer to so many common connects across sectors, across portfolios, and across, of course, investment bets as well.
Sure. Thanks very much, Ashwin, and thank you for inviting Sanjay and I onto the show. We greatly appreciate it. I think Sanjay covered everything incredibly well. So as he mentioned, we really got to know each other in 2009, 2010, when we were both working at KKR. And during those days, Sanjay became, a very close mentor of mine. He trained me, he coached me. He really helped me a lot with my own career at KKR, with several of the other colleagues that I worked with. And through that, the relationship grew, the relationship blossomed. And then, as Sanjay had mentioned, when I left KKR and joined my father, we continued our relationship, our friendship, which today has got a lot of different aspects to it. But more than the business side of our relationships, the families remain very close, personal friends. We're together a lot, and it's just been a wonderful relationship over the last decade plus.
Right. So now that we have the background clear, Sanjay, shifting the focus back to you. It's clearly the beginning of the Sanjay Nair 2.0 era, so to say. Over the past several decades, you have helped the Indian operations at a top MNC bank, that's Citi. You've been the head of the Indian operations of a global private equity major, that's KKR. You've witnessed and also contributed individually to a stellar market debut of Nykaa. And finally, you are now keen to start off your innings as a VC investor, looking at the tech space specifically. So help us understand, what are some of the key lessons that you've picked up as a deal maker over the years, Sanjay, especially, when some investments can turn sour? What are some of the key lessons, that you can share with us today?
Yeah, so Ashwin, firstly, it's 3.0, not 2.0. I was a banker first for many years, over a quarter century. I thought the only firm I'll work for was Citi Group. And then, of course, fell in love with private equity, started the KKR operations here, and that I think was the 2.0. Of course, I still continue as an advisor with KKR, and I think we always had an urge how to bring about the learnings in both those stints, as well as the manifestation of the relationships and the deep network that we have developed both in India and globally. So I think it's also a question of kind of cross-section of experience and age. I mean, we aren't getting younger, okay? So I think as you get older and you probably sit back and think, what do you really want to do? So we are very clear. Firstly, we're going to be in India. Secondly, we want to build businesses in India. We want to build good teams in India. And we now want to be able to back entrepreneurs in India, for India. In that context, this is the next logical step. In fact, I'm in Europe. I met some of very smart folks here at an event where I am. And, it's amazing to see how people from these kind of backgrounds have evolved into merchant bankers, into private investors, into running multifamily offices. I think that's the next logical thing. So I don't think it's any rocket science, but for me, it's bringing together the learnings as well as the experience of the two of the best foreign companies, foreign investors in a way in India. Citi even today is one of the largest and the most diversified foreign bank in India. KKR, as you know, has got many verticals now, very mature, solid investor, backing solid entrepreneurs and building really good businesses. We have a great team on the ground. So I think the biggest learning has been, how do you back the right people? How do you choose the best entrepreneurs? And how do you give them long-term patient capital? And I think when we come to Sorin, we should talk about that. The second thing is that, everything doesn't happen as you expect it to happen. Okay, you can put a lot of money to work and you just hope everything blossoms, but that's not the case in real life. And what really matters is real business models backed by real long-term capital, and of course, fronted by the best entrepreneurs. But they need advice and they need guidance and they need help. At least from my perspective, and Angad will speak about this, from my perspective, if I can't bring my 39, 40 years of experience and the so-called age to these young entrepreneurs, that won't be good. So really my aim is to really back these folks, not just with the money, but with a lot of old age advice of how to build businesses. It may not be the ultimate in e-commerce or performance marketing, but definitely some of the other building blocks all these young entrepreneurs will need. I think that is what we think we can bring to the table.
Right, Sanjay, before we move on to Angad, I know it's extremely difficult to distill several decades of deal making experience, but say to the new emerging deal maker, say to a young deal maker who's just started off, what would be your biggest advice to him or her be?
To a deal maker, and you're talking of a deal maker who's an investor or who's doing
it could be it could be a corporate M&A lawyer, it could be an investment banker, it could be somebody who's joined a private equity fund.
Okay.
What would your key message be to a youngster starting off in the world of deals?
So I think first and foremost, we have to listen to the customer who's on the other side of the table, whether it's an entrepreneur or it's a corporate or whatever. I think people have to spend time listening to what the other person is saying and what are his real objectives. Okay, that is very critical. Second advice is put yourself in his or her shoes and remember the solution you're giving them. Is it long-term sustainable or not? See, this is very critical. You can do a short-term objective and sort of, get it done, and then you find that things don't work out in the long run. So putting yourself in the other person's shoes and making sure that the advice or the product or the investment you're offering with the structure, is it truly sustainable and is it the right thing for that person? I think that's absolutely critical, not about velocity of deals and velocity of, banking deals.
Right. Angad, you worked at KKR, but you've also been associated with several top global banks earlier. Then of course, you moved on to the Caravel Group, where you're now the Chief Operating Officer. Help the Indian audience understand what's the investment thesis of the Caravel Group, and help us also understand what's the kind of monies that the group has put in India when it comes to at least the PE portfolio.
Sure. Thanks, Ashwin, for that. It's worth mentioning, as you said, that I spent the vast majority of my career working at KKR. And during that period, it was a wonderful learning experience for me. I worked with some of the sharpest and smartest guys in the room, and I learned a tremendous amount from guys such as Sanjay and my other mentors and people that I worked for. And what I saw from them was really the approach and how to build investment management businesses. We were building Asia at the time, building each country, building the different product verticals, asset classes. And then ultimately, then when I left to join my father, I really saw his decades and decades of building operating businesses in the industrial complex. I obviously grew up with those businesses and saw my father build the business the first time and then starting it the second time. And I think that brought a lot of different approach to at least how we think about building both investment management companies, but also helping entrepreneurs, founders build their companies, which is similar to how Sanjay was saying is really going to be our approach on Sorin. So once joining the Caravel Group, my first foray was really in helping diversify our business from being focused in the maritime industry as a maritime services provider, ship management company, ship owner, and a commodities trader into having this investment management vertical as well. And through that, obviously, we've grown a couple of different funds. We do have the permanency of capital from the family, and we've really built it up first and foremost as a public markets investor, and then secondly as a LP to leading private equity funds, hedge funds, and venture capital funds in the world. And with that, working alongside some of those GP relationships we have. And with that, that's kind of the approach of what next with Sorin as we look to build this investment management company, learning from all of our experiences at KKR, at Citi, at Caravel, and bringing best practices into driving a differentiated and very sustainable business model.
So Angad, like I said earlier when I introduced you, Caravel Group is an early and a very prominent investor of Nykaa. Now, can you share any anecdotes or any experiences which led to you taking the plunge and betting on Nykaa? Anything from the past that springs to mind? Because the Nykaa market debut was one of the most iconic moments in the history of the Indian capital markets, and that sort of set the ball rolling for several other companies in the same segment, especially tech-enabled companies. So, what made the Caravel Group bet right at a very early stage on Nykaa?
Sure. Look, I think there were a couple of elements that came together, which again reiterates how I think the focus is going to be on Sorin. Sanjay may smile at this, but we were taught at KKR when we first joined that people like to do business with those people they like and trust. And so it's a very relationship style approach to building businesses. And I think one of the biggest aspects of what drove us to invest in Nykaa at the beginning was really the relationship that we also built with Falguni, which again, as I mentioned, the relationship has now expanded across the family, and understanding her thesis, her drive, and what she wanted to do to create Nykaa, I think was one of the biggest differentiators of why we pivoted that way. And then I think we were just learning from what had been successful in other markets, plus the demographics of the Indian consumer, the digitization of India, and a lot of the tailwinds that continue to exist in India, which is what makes us very excited about Sorin. So if I go back 7-8 years when we were doing that, a lot of those trends still really remain in place, which we'd like to capitalize on. And I think one of the other aspects which we talk a lot about is we have to value the risks. And a big part of what we're trying to do is take execution risk and operational risk, but perhaps not so much technology risk, so to speak. And that was also kind of clear in the Nykaa thesis, which I think is going to continue in what we try and do with Sorin.
Right. Sanjay, Sorin is, of course, your latest project, which you founded. But, you're talking about the project at a very, very interesting time. There's been a sharp fall in tech valuations globally, not only in India, but also globally. There are entrepreneurs who are talking about the fact that maybe the startup winter is here. We have seen several startups shutting shop, job cuts around the corner, and there seems to be a fair bit of sense of gloom and doom in the startup sector. In fact, so much so that some of the the usual heavyweights like the likes of SoftBank, like the likes of Tiger, they've posted losses. They're also sort of pulling back. Why now? And why Sorin Investments at this particular juncture? Don't you think it's a very challenging time for a new fund like yours to sort of, go ahead and hit the road running?
Yeah, I think, look, firstly, we didn't like time it. So, it's not like timed like that. It was always timed where we knew that in this phase in our lives, we want to build something that is quite unique and should be an investment management firm. And what better sector than early stage tech? And I think those reasons don't go away, whether you are in this tough phase or the macroeconomy is a little bit difficult. I'm sure it'll come out very strong, or what's happening in the world. I think what you have to look for, Ashwin, is the vectors that are going to drive the change in India. First and foremost, you have a government today at the center that is driving digitization like there's no tomorrow. I mean, let's face it, in the last 5 years, all the metrics on digitization have just gone through the roof. Okay. Secondly, you look at the ecosystem on startups and innovation. Again, a big catalyst is the government, but also the entrepreneurs on the ground have really grabbed the opportunity. And if you just look at where India is going in terms of consuming digitally, I think it's just about not even halfway through if you compare to some other markets. You put all that together and then you combine that with, in a way, long-term local capital that we are all putting in. I think it's a very interesting mix to help these tech entrepreneurs build unique businesses. So I don't think we have even thought for a minute about, hey, is this a great timing, not a great timing? Yes, from a micro investment point of view, our team
Right.
that we are putting together is going to be careful about the risk reward, is going to be careful about multiples, it's going to be careful about the choice of entrepreneurs. And as far as I'm concerned, along with Angad, we are going to focus more on how to give advice to this team and then how to give advice to the entrepreneurs where they invest. So it's not a question of timing and it's not a question of the temporary cycle that we are all going through. And secondly, the big names that you named, I think they'll be back. I don't see them going away. This market in India today is one of the most attractive markets in the world.
Right.
Okay?
It's a market nobody
So
can enter.
I don't think anybody is going to go away. So maybe media plays it up, down. I don't know about that. And look, we are not that big. Okay, we're just $135 million when we get to that. But we want to have a real impact. And the opportunity for impact in India has never been better than today. Yeah. So
Very quickly,
I
Sanjay,
think the
before I get
timing now
Angad
looks
in.
good, but it was never planned that way. Yeah.
Right. I take your point. Very quickly, Sanjay, before I get Angad in, what's the typical size of investments that you look at per deal as far as Sorin is concerned, and what are the sub-segments that you're looking at in the tech space?
Yeah, so given what I just said about the digitization of the economy and the whole consumption behavior that is changing, you can imagine it will be all aspects of consumer tech, right? So B2C in a way, whether it's fintech, agriculture, logistics, education, so all the tech-driven sectors, as well as B2B tech, as well as SaaS. So that's one. I think we want to be somewhere in early A to late B, early C series. With 125, 135 million fund, I think we would like to have a portfolio over the long run of 12 to 15 deals, which means average deal size can be $10 million. We start probably as small as 2, go up to 5. If the company is doing well, keep some dry powder for putting in more. So ideally, again, this is all, speculative and ideal. Yeah, we would love to have about 10, 12, 15 deals in the portfolio in 3 years' time and deploy anywhere between 2 to 10 to start, and then let's see where we go.
Are we anywhere close to the first deal of Sorin Investments?
We have a really active pipeline. It's unimaginable, the pipeline, how busy we are being kept by our team. Banga and I do the review of pipeline deals pretty much once a week, and I think we might move it to twice a week, given the number of deals that are coming our way. But I think our team is very experienced, and they're sifting through it very quickly. They're filtering it very fast, so that we make sure we don't come across as people who take forever to make up their mind, as a team that doesn't give impression to these companies who come to us that, hey, we're like not decisive. We want to be very nimble, very decisive, very quick. So with that kind of thesis being put together, the team is filtering things very quickly. But still, we're seeing very, very attractive opportunities, and some really compelling business models. It's quite interesting how creative the entrepreneurs are today.
Right. So clearly busy times for both you and Angad. Angad, you backed, Nykaa earlier. Now you're backing Sorin Investments. But, this entire VC space, it's quite a crowded space. There are people who have been there, done that. What do you think would be the USP of Sorin Investments? What exactly will you guys get to the table, which is not already being provided by other players in the same bracket?
Sure. Look, I think there's some world-class investment management companies that are really doing some remarkable things in terms of their own businesses, but also the type of founders, entrepreneurs that they're backing, and the type of companies that they're incubating. And I think they'll continue, as Sanjay had said, continue to be in India and continue to do what they do best. I think our focus is not really about worrying too much about what other investment managers are doing, but it's really about trying to play to our strength. And during a lot of today's discussion, you've heard me talk about building companies and a relationship approach to capital, et cetera, which is what we learned kind of from both, the private equity, or running and building private equity businesses, but also then the portfolio companies that we back. And now, for me as well, in terms of my own, our own family business and building those operating businesses. So I think a lot of the key differentiator here is the type of capital we have. It is very long-term and patient capital that allows us to look through cycles and build sustainable long-term businesses. Second is our approach to building businesses versus, I would say, making investments. And I think that's a differential as well, that every time we look at deploying capital, it's not just about writing a check, it's about what else can we do with the founders or the entrepreneurs, the management teams. Do we help them beef up their C-suite? Can we help them here? Where do we step in? And that, again, comes back down to the relationship. So we do want to partner with entrepreneurs and firms who are looking for that type of relationship. And then thirdly, I think it's about the areas of focus. Given the $135 million fund, we're not going to be something to everybody, and it's really about focusing on the right areas between this early A and late B, maybe C area in the consumer tech area where there are significant tailwinds, and just focus on that area where we have that expertise versus, I think, going out and do something that's out of our wheelhouse, because that may be the flavor of the day. So I'd say that, generally speaking, is how we're looking at building Sorin into a sustainable investment management company, but also those companies that we back through cycles.
Yeah, Ashwin,
right.
Can I add something here?
Sanjay, I'll just come back to you. Just give me a minute. I'll come back to you. Quick question to Angad, and then I'll come back to you, Sanjay, just in a minute. Angad, like I mentioned before, this is the first time that you're speaking to an Indian media in such a format. So therefore, there is a lot of curiosity about the Caravel Group as well. I was looking at your portfolio on your website. So, you guys have bet on the e-commerce space very clearly. You guys have bet on Meesho. You guys have bet on the hospitality space, Max Healthcare. In fact, hospitals and healthcare, that's currently a very buzzing segment in India. A lot of promoters looking at exits. A lot of PEs also looking at exits. Just give us a broad sense of what are some of the major sectors or themes that the Caravel Group will look at in India over the next 1 or 2 years?
Sure, Ashwin. I think maybe it's worth just clarifying that there's really two parts to what we do. First is the operating business, where we're a pretty diversified industrial conglomerate, where our primary areas of focus are in the maritime industry, ship management, ship owning, ship operating, and then in the commodities trading field, mainly again in industrial dry bulk raw materials. So, central to a lot of what we're doing is actually India. And, as I might have alluded to earlier, we are one of the largest ship management companies in the world, and we have a seafarer base of 24,000 people, of which 60+%, 15,000 or so are from India. We are one of the largest employers of Indian seafarers. So India is a very, very core part of our maritime businesses, and we've been investing in the segment for a long time. We have training institutes dedicated to the seafarers with all kinds of simulators, engineering simulators, bridge simulators, where we offer a lot of courses, both for our seafarers, but also to the market. And so that remains kind of very core to us. The investment management business, which is the business that we kind of started later under the Caravel Group, as I alluded to earlier, is really first focused on global capital markets, equities, and credit, and then to being a limited partner to alternative investors. And with that, we've kind of helped co-invest or be alongside investments that our GPs have done. And a lot of that's ended up being in India because that's where we have a strong view on the thematics, the demographics, and where the economy is going to be. I think the one thing I can say is we'll continue to look very favorable on India. Sorin is a really, really big part of that. We've talked about why, but on one side, it's helpful having permanency of capital where we don't necessarily have to say we're going to deploy X amount in Y period of time, because I think that sometimes makes you do deals that you shouldn't be doing. But India will be a very, very important part of everything that we're doing, from maritime to our own Caravel Asset Management, and obviously Sorin as well.
Right, Sanjay, you were making a point earlier. Please go ahead.
No, I was making a point to your question about how will Sorin be different. Besides what Angad just mentioned, I think I will be spending real time on the investee companies. So when you make the investments and they're made, I actually will be putting considerable amount of my own time in guiding, talking to these entrepreneurs, helping them build a business, like I mentioned before. I think that's a differentiator. If other GPs do it themselves, that's fantastic. I think people are quite busy deploying money. We want to have, as Angad said, not be too prolific and not be everything to everyone. But where we get into a relationship, we really want to provide more than just the capital, but real time spent with these guys. Also, we'll have an advisory council over time. We're putting together 2-3 really experienced people from a similar industry, from someone who's done it, seen it, listed entities, someone who is a talent manager and a strategic talent advisor. I think the big issue that's going to happen in India, as we know, with all these surfeit of opportunities, the shortages are going to be for good talent, frankly. And the young entrepreneurs themselves can't do everything, right? They need to hire really fantastic people. So I think we are going to focus a lot on hiring and sort of talent management as well.
Right. Sanjay, I want you to stick your neck out over here. Last year we saw, you saw a tremendous number of unicorns born in India Inc. This year, if you look at the last few months, the frequency has considerably dipped. And, many believe that the startup party is over, the froth is over. Do you believe that the startup winter is here, that the froth is over, and now going ahead, valuations will be a little more realistic in the sector?
Yeah, look, firstly, I don't think startup culture is over at all. Okay, startup and innovation, like I mentioned, given the ecosystem today in India and the whole drive on digitization, I think it is there to stay. And as I said, we're not even halfway through that. Okay, so I wouldn't worry about the aberration in the multiples coming off. Yeah, that's fine. They're different business models. Maybe they were overvalued. Maybe they get correctly valued. But that's no reason to call it a winter. Okay, please. So maybe it's a bit of a winter in terms of deployment of capital and maybe exits. So what this will do, this will force entrepreneurs to build and think about path to profitability and what's a sustainable business. And it will force the investors to think very hard about who are they backing, why are they backing, and is it just one round after another to just have better mark to markets, or is it about building a real business which can be really monetized and exited? And not because the fund needs to exit, but because you need to create a currency for these companies. If these companies need to keep growing, okay, you do need ultimately public capital. And there is, again, no better market today from a public markets point of view, where you have retail investors in India waiting to get their hands on new entities and new companies, and also institutions today, foreign and local, are flooding towards this market. So you've got the supply side and the demand side both intact in India. But yes, it's a bit of a winter, but that's everywhere in the world. And I think India is going to have the shortest winter on that aspect. And you're going to see a lot of capital come back. Yeah, cheaper valuations, that's fine. Nothing wrong with that. Just a bit of sense of realism. So I think path to profitability, the right business model, just doing rounds after rounds make no sense. And just making sure that you know when you stop burning cash and when you start making some profits. It's going to be critical.
No, that's very interesting. That's a very interesting point you made, Sanjay, that India will have the shortest, winter when it comes to funding, at least. Angad, would you like to chip in over there in the entire, to this entire discussion about what's going on in the startup sector? Nobody's exaggerating anything over here. These are facts that are coming out in the open with every other day regarding job cuts, regarding new startups shutting down. So, what is your take when you think? Sanjay is clearly very optimistic, but when do you think these tech valuations will bounce back? You're a Singapore-based conglomerate. You would have seen, you would have had a more of an Asia outlook. What are you picking up on the ground?
Sure, I think
Tell me if my apologies, a Hong Kong-based conglomerate. Go ahead.
Not quite. Thanks, Ashwin. I think I agree with what Sanjay was saying, and we tend to both be similar optimists on this. I was actually coming back to another point that Sanjay had made, which I think also comes back to this discussion, is really about what we're trying to do that's different, and then also why I think will be different for the startup scene in India. But I think it's also about the global reach of what Sorin is trying to do in terms of the expertise we're bringing, the type of businesses that we're trying to back, and also some of the capital that we're bringing. And so with this global reach in terms of how we bring that into India, capitalizing on this depth of Indian expertise we have, I think is a combination for something truly world-class. And then with that, I think the winter, if I should use that word, will be a shorter winter, because I think capital will start coming back. But Sanjay is right in that they will be back for differentiated business models with a path to profitability at appropriate valuations. And private market valuations tend to obviously follow a little bit of the public market sentiment, and public market sentiment is not ideal right now at all. And we have seen pretty lofty valuations of growth tech come down as a result of inflation, interest rates, everything else going on. And obviously that has a knock-on effect. But there is also a little bit of disconnect. So my view tends to be quite similar to what Sanjay was saying.
Angad, the current market environment, the current challenging market environment has affected all sectors, especially, even some of the other listed entities, in the non-startup space have been affected. The tech space, as we have clearly seen, has taken a hit in terms of valuations. Nykaa is also no such exception. Like we were discussing earlier, you're one of the earliest backers of Nykaa. It had a fabulous debut. But of course, in the last few months, we've seen quite a steep fall in the stock price of Nykaa. Profits also, there's also been a decline in profits quarter after quarter. Of course, that could be because of higher marketing spends, because during COVID, probably Nykaa didn't spend as much. But does that concern you as an investor? And also some flavor from you on, the competitive intensity in the fashion and beauty products platform. There are other players as well, like Mamaearth, who are now emerging on the scene. They might go ahead and do an IPO. So what's your take over there, Angad?
Sure. Look, Ashwin, if you don't mind, I'd prefer not talking really about Nykaa and its business model and what they're doing, because that's really for the management team to discuss that. But I can personally say that we're a long-term, very committed shareholder. We're not worried about the stock price day to day, what's happening, and we're not worried about necessarily earnings quarter to quarter and what's happening, because I genuinely believe that that's not how you can run businesses if you're worried about the quarterly stock price or how things are going, because then you're too busy looking at the trees and not the forest. And I think that's one thing that the team's always done well, is look at building their business without necessarily the noise from the outside. And to me, who as an investor who's been with them for the entire journey, I am not worried one bit about the stock price or quarterly earnings, and am very long-term committed to the business.
Sanjay, would you like to quickly chip in on the competitive intensity over here, the beauty and the fashion products space which Nykaa operates in? It's a leader in that space, but there are others also that are slowly and steadily, taking steps, and they may look at making debuts on the Dalal Street.
No, I don't have any comment. I'm just a non-exec director. I have not much idea. I read the same press you do.
All right. Sanjay, so it's a well left by Sanjay on that question. Sanjay, let's also turn focus on some of the sovereign wealth funds, and there are some pension funds as well. So what has happened is, and somebody was telling me this recently, that if the VCs have taken a backseat, in startup investing, you also have some of these sovereign wealth funds and pension funds that are now slowly and steadily looking at this space, which they traditionally did not look at. How do you look at sort of competing with them in this environment?
Yeah, so I think sovereign wealth funds have a lot of capital. I think what they will be looking at this sector as some of the VCs withdraw, which I told you earlier, I don't think that's the case, and VCs will come back. And these big names are real big boys with a lot of stamina. Okay, so that's one part of it. But if you are making a case that these entities are coming into the market, I think they were bound to do it. What they need is they need the right people and they need them on the ground. Okay, you cannot be sitting overseas and trying to build a business in India or make investments. So either they will come through funds, and I think same VC funds are going to come back on a fundraising spree because India is going to offer even more attractive opportunities. Sovereign wealth and pension, looking directly to me, it looks a little bit kind of a far stretch, because as I said, you need a team on the ground. You can't be sitting overseas and thinking, where do I put my next $25 million? So I think they will come through the funds, and the funds will be out there raising money once again.
Right, Sanjay, we've spoken about your transition. We've spoken about your new project, that is Sorin Investments. We've also alluded to Nykaa, the relationship between you and the Banga family. What about your NBFC arm, which is Flexi Loan, if I'm not wrong? Any listing plans for that company? Because there is a peer or a rival, so to say, in that space, which is backed by Upwood, and that's SBFC Finance, which also focuses on the MSME space, which has in fact kickstarted this IPO process. Any value unlocking plans there? Anything we can expect going ahead, or it's still too early days for that entity?
Yeah, I think it's too early. We started that as a bunch of friends and ex-Citi bankers about 4 years ago. Then obviously COVID hit us, so we bootstrapped. We've got 3 excellent founders there who built a fantastic business. And now that we look back and think, we were extremely careful, and that really paid off dividends. We are becoming, I would say, Flexi Loan is becoming a platform, a seamless platform for originating MSME and SME and the supply chain financing, and all the way to putting it on the balance sheet of the NBFC, as well as co-lending and laying off the risk with other banks. So it's becoming a very nice platform play. They are raising equity and debt, which you'll hear about soon. And I think with that fundraise that they're completing now, they should be good to go for another 12 to 18 months. And I don't think we have any plan to do in a hurry, because again, to the point that we keep making, this is again a bet behind 3 founders, and not just by me, but a lot of other people. Again, a lot of ex-bankers and now some foreign firms. And we want to give them time. There's no rush. And again, in our dictionary, the word exit and monetization is going to come much later than normal. And I think the word, while it's not permanent capital, but it's rather permanent for all of us, right? We don't, as a family, and that's from our family side, we don't owe an exit to an investor. We don't owe an exit to anyone. Idea is to back businesses. I think, Ashwin, what you're going to start thinking about now as you think of us is, we're not going to scatter investments all over. We want to just build few businesses and for the long run and hold them, right? So Flexi Loan, I think, is one of them. Sorin is another one.
Sure.
So think of Sorin as an investment management platform that can have more hues in the future. Think of Flexi Loan as a platform that is talking to the initiative in the country about driving financial inclusion, not at the personal level, but at the MSME, SME level, and generating fintech as a real business. So think of it as platforms and businesses rather than, making some 40, 50 investments. Yeah.
Right. Exciting days ahead as far as Sorin Investments is, concerned. Angad, a very quick question, and, if possible, would be great if you can stick your neck out over here just to get a broad sectoral, flavor from you. Like I mentioned earlier, the Caravel Group has bet on e-commerce, Meesho, healthcare, Max. There's retail, there's telecom. Now you're looking at the VC space. Any other new sectors in India that you are bullish on going ahead? If you could just throw some light on that.
Sure. Look, I think quite bullish around the broader thesis within ESG and sustainability. And if I was to stick my head out, I'll go down the E route, environment, and then stick my neck out a little bit more. I will say around decarbonization and reducing that carbon footprint. I think it's going to be incredibly important for India, and I think we as India have the power to change a lot of the world when it comes to carbon technologies.
Right. With that, it's time to wrap up this very special interview and this latest edition of Moneycontrol Newsmakers. Sanjay Nair and Angad Banga, it's been an absolute pleasure chatting with both you gentlemen. Thank you so much for taking all our questions here at Moneycontrol, and all the best with the new kid on the block, that's Sorin. With that, it's a wrap and a goodbye from me, Ashwin Mohan. Stay tuned to Moneycontrol for more news, views, and updates.